I know you've seen this movie before. Perhaps there are hundreds, if not thousands, of videos just on YouTube explaining exactly this. Yeah, I'm not going to challenge anything that you already know, because I know you know a lot. You're probably a rich bastard, just wasting time on YouTube looking at how to trade the stock markets, right? I'm just trying to put this in the context of the market without wasting much of your time. So here's an image that I've marked C, support and resistance, okay? The resistance is an approximate price point where the stock or the index or whatever it is that you're trading has found sellers to absorb all the buy orders. Why? Because at this price, people are in agreement that the price has reached its upper level. And who are these people? So these are your regular people who are trading in the market, people like you and I, are your domestic institutional investors, the foreign institutional investors, and maybe even my grandmother. That, by the way, is my real grandmother. So what do people do when they realize that the price has reached the upper circuit? They decide to sell. So that's exactly what happens at resistance. So let's dig a little deeper here. What's exactly happening at resistance? So at resistance you have the old bulls. Old bulls are those bulls who bought some time back and now they are about to book their profits. When they see the resistance approaching, they are preparing to sell. And we also have the new bears. The bears that have been holding on to sell, they decide to take their short positions at resistance. And do remember, both of these, bulls and bears, could be institutions and they know what they're doing. Apart from these two, there's also a special breed of people that buy at resistance. And you're right, us. Us retailers are so optimistic about a breakout that at resistance, you're not counting to sell. You're dying to buy. And now if you decide to give equal weightage to all the three parties involved, there is a 66% chance that the resistance will be good and the breakout will not happen. Exactly the same thing happens at the support. At the support, you have old bears that are squaring off their positions to book profit. Now, when the bears decide to square off, it is a buy order. And you have the new bulls. The new bulls are waiting for the price to reach at the support so that they can place their buy orders. And now we come to the retailers. Now, the retailer again is extremely optimistic about the price breaking down at support because that's how we want to make money. So we, the retailers, we end up placing a sell order at support. Now, don't get me wrong. I don't mean that all retailers are stupid. Most of us are, myself included, and this is a very, very typical newbie mistake. Remember the number of times you sat through YouTube videos and all those lectures that you paid for where people are asking you to wait for that one big move, the one big move that's going to come. Now that one big move is nothing but a breakout. So it is good to be prepared for a breakout, but it is not good to count on breakouts. Why is this information important, you ask? And I'll say it's important because it puts some sense into your head. Because now you're not counting on a breakout. You are accepting mentally that a breakout is a possibility, but it's not a certainty. And then you got to do what is expected of you at that particular position at support or resistance. That is to either square off your position or be prepared to take your next position. How do we determine the strength of a support or a resistance? Well, this is the easiest thing that you can do. All you have to do is make sure that the support and resistance lines are drawn at a higher time frame. Say that you're trading using a 5-minute time frame, it would be an excellent idea for you to spot supports and resistances at a higher time frame like a 15 or a 30-minute time frame. And remember, higher the time frame, higher is the accuracy of the support and the resistance. But for a day trader, I would recommend going for a 15 or a 30-minute time frame to spot that perfect support and resistance. Now that we've spoken a lot about breakouts in a video that is meant for support and resistance, let me give you a few pointers about breakouts. Do not trade breakouts that you initially spot. Now, this may sound very counterintuitive because this is what we all are waiting for, the breakout. But when you spot them initially, do not trade them. Most probably, they are fake outs. And how are these fake outs caused? There seems to be a virus in my computer. There's probably a much more reasonable explanation to this. These fake outs are mostly assisted by retailers like us. Now, though a lot of us are counting on breakouts at support and breakouts at resistance, there are some of us who actually end up doing the right thing by placing buy orders at support and sell orders at resistance. But this right thing is done way too early out of enthusiasm and love for the market. Kind of like premature ejaculation. You entered too fast and now you're kicked out. And that is not a good feeling. I should know. Anyway, let's get back to the charts now. So all these early ejaculators, I mean those guys who enter really fast, what do they actually do? So let's say that they have entered a buy order at support, which is a very logical thing to do. But when they enter with a buy order at support prematurely, what they're doing is they're also placing a stop loss slightly below the support, right? So now that the big players are not yet in the market because they're not premature in their positions, the market has nowhere to go because the market has already eaten up the buy orders of the early entrants, so to say, and now they are stagnated. No, wait, but there are orders. You know which ones? The stop loss orders that were placed by the same retailers when they prematurely entered the buy positions. Now that their buy orders have been executed, the market can easily go and eat up their stop loss orders, which is nothing but sell orders, which shoots the market down. And you may think that this is enough insult to the retailers, but it clearly is not. Now, as the market is moving downwards, most of us end up thinking that this is a breakout towards the downside, and most of us enter for the breakout in a short position. And now you can imagine what we would do while entering a breakout. We would place the stop loss right above the support and hope that the move continues downwards. But this is not going to happen again because the volumes are very low. And at low volumes, once these sell orders are executed for the downside, the market is left with no orders. And again, what happens is that the only orders that are left are buy orders, which is right above the support, and the market rushes towards the buy orders to execute them. It's anyone's guess what happens next. The institutions now buy with huge volumes and they propel the market upwards. And you think that the story is finally over for the retailers? Absolutely not. It's just like the Fast and Furious movies. The misery never ends. We end up placing premature orders. We end up chasing the market in the wrong direction. We help with our stop losses to bring the market back on track, and now we also chase the market upwards. This will only drive the prices higher. So initially the stock that was available for just 20 rupees at support is now gone up to 30 or 40 rupees. Now because they know that the stock is going to move up till resistance, now these retail traders are going to buy again at a higher price at 30 or 40 rupees, just fueling the move up. And who benefits from all this? This cycle just keeps going on and on and on. It's so funny. And despite knowing this, all of us are a part of this. Alright then, fellow asshats, I really hope that you liked the content here today. I hope to get in touch with you again soon. If you like the content, you could give us a thumbs up, or if you like to be verbally fondled every now and then, you can subscribe to this channel. And for your sake and mine, I hope we all end up making a lot of money in the stock markets. Bye for now.